Get familiar with your stocks and their behavior. There are approximately 8,000 stocks and EFTs to trade. No doubt you have your own method in place for finding stocks to consider for trading. The stocks you place on your list will depend on the type of strategies you use, and whether you are trading stocks or options. Consider creating a core list of about 30 to 40 stocks that you become very familiar with. Closely following a handful of stocks will help you learn about their behavior and possible patterns, which may give guidance into a stock's next move. By developing a core list of closely watched stocks, these should include stocks with a high liquidity, that is, stocks that are highly traded, with an average daily number of shares traded over 2 million. Highly liquid stocks ensure you will be able to get in and out of trades easily, and at a fair price. These stocks will have a narrow spread between their bid and ask prices. You'll want stocks whose bid-ask price spreads are only a few pennies, no more than 30 cents at the most. A good part of a stock's movement can be caused by the market's opinion of the industry or sector that the company is in, such as energy, financial, healthcare, or technology. For that reason, pay attention to the sectors that your core stocks are in. You can find the sectors that are currently in favor with the crowd by using the free website finviz.com. Click on Groups. The daily, weekly, and monthly relative performance of about a dozen sectors will be displayed. A trader friend of ours has been trading just 3 or 4 stocks over and over again for the last few months, as the price of these stocks has been in a trading range, moving up to an overhead resistance level, then down to a bottom support level. The stock's price bounces up off the support area, and the pattern repeats. Our friend has been closely following these stocks and the news that surrounds them, taking advantage of these moves by buying and selling these stocks on a regular basis. She has gotten to know the general behavior of these stocks. Of course, trends can change at any time, since the stock market can be what seems random at times, so trade positions need to be monitored. Option strategies work especially well for stocks trading within a range or that are bouncing up after a long downward trend. For stocks in a trading range, options traders can buy, call options when the stock is at the bottom of the support area and is starting to tick back up, and they can buy, put options when the stock peaks at the resistance level and begins to move back down. Options traders can also use a strategy called a short iron condor for stocks trading in a range or that are in a sideways pattern. With this neutral strategy, 2 option spread trades are used to define an upper price and a lower price within which the stock moves. The trade makes a profit as long as the stock remains within that range during the life of the options contract. With this strategy, a stock price has wiggle room. It can move up or down within that range, and the trade is profitable. The trader doesn't have to be exactly right about the direction of the stock movement. For example, suppose company XYZ stock is currently trading at $100 per share, and it is your opinion that the stock will trade around that price for the near term. You can create an iron condor with a $105 strike as the upper level and a $95 strike at the lower level. As long as the stock does not rise above $105 or drop below $95, the trade is successful. Professional traders at tastytrade.com have a motto of trade small, trade often, advising all of your trades to be in small amounts, and not to aim for home runs. Also, by trading often, you will get better and better at understanding how your trading methods are working, and you will get to know the general behavior of the stocks you trade. If you enjoyed this video, please click the like button and subscribe to our channel for more personal finance tips that are designed to help you win with money.